Recently, the federal government launched the 2024 Economic Review Report with projections for the year 2025. Now, in spite of assurances that government will tighten monetary policies, help improve agricultural productivity, and even enhance foreign exchange rate stability, there are concerns still on how it intends to control the issue of rising inflation, as many Nigerians continue to grapple with the harsh economic situation. Well, tonight on the News at 10, I'm now joined by the CEO of Financial Derivatives Company Limited, Mr. Bismarck Rwani, to discuss the issues. Mr. Rwani, great to have you on the News at 10.
Good evening. Thanks for having me.
All right. So, of course, the 2024 Economic Review is already out from the federal government. And it appears the news we're getting from the present administration is, the economic reform policies are yielding results. We talk about reunification of foreign exchange rates, naira appreciating, and the rest of it. But Nigerians are still worried about the issue of inflation, of course, which I talked about. Now, what's the situation, Mr. Rwani? What's the situation with the economy? Are we on a mend or at a bend?
Yeah.
Interesting.
That's where we are. Mending, bending. But the reality is that things are improving slowly, very slowly, but people don't believe. So you start by saying, what were our broad goals? One is that we said the economy will get to $1 trillion by the year 2030. We are at 368. I don't think we're going to get there, right? Annual average growth rate of 7%. So to get to $1 trillion, you need to grow at 40% a year. So we're not going to grow at 40%. Can we achieve a growth rate of 7% when we're at 3.16 now? Possible, but it's going to take a lot of work and hard, it's a hard road to travel. Single-digit interest rates, not in the near term. Inflation rate of 9%. These were the broad goals we had a couple of years ago. Inflation rate of 9%. The projections are that for November, inflation rate is going to be at 34.6%. Exchange rate of 900 naira to $1. That's a far cry from now. So we're going to.
It is a far cry from now.
And the national rate of unemployment. So the reality is that what were the policies? Eliminate petroleum subsidies, manage floating exchange rate, palliatives targeted at small and medium-scale enterprises, monetary policy tightening, tax reforms, and palliatives for consumers. So those were the goals. But what evidence-based macroeconomic scorecard? This is what the evidence tells you. There are 6 variables here. 3 are in green and 3 are in red. First one is that growth has gone from 2.86 to 3.2%. So it's up by 0.34%. But the growth is not inclusive and it does not address the areas where people are employed. Inflation rate target 24.7 in 2023, now 33.2, but we expect it to go up to 34.6 in November, but begins to taper and get better in 2025. Trade balance, this is the difference between your exports and your imports. We are going from $3.5 billion to $13.78 billion. What this means is that your currency should be stronger, the economy should be more robust. And so this is positive, but it has to translate down to the people. People are not feeling this at all. People feel hardship and they are sulking. The stock market capitalization, interestingly, it's gone up to 39.56 to 58.3. This is because of listing, and we'll come back to where we're going to see the profits. Companies are declaring losses. So consumers are sweltering under inflation, and companies are declaring losses. But it takes time for things to change. The target by this time last year, the currency was at 899 naira to $1. Today, it's actually at about 1640, right? So the currency has actually tanked a little bit. And total debt was 97 trillion. At this time last year, it is now 154 trillion. So balanced scorecard, 3 greens, 3 reds. So you can't complain. Now, a closer look at the GDP. You can see that it's been going this way, right? And GDP per head is now down to $1,900, right? Some say it's $1,000, some say it's $1,000, depending on what GDP numbers you use. But this is where we want to get to. We want to get to $1 trillion. This is not going to happen. So we'll probably get somewhere closer by 2026, 2027. We begin to grow at about 5-6%. But you must do something about power supply and agri. This is the Naira. The worst position of the Naira was sometime in February this year. We got to 1,915 Naira to a dollar. Ever since then, the central bank has been working, putting more money. We've raised some money in the Eurobond, diaspora bond. Federal Ministry of Finance and Coordinating Ministry of Economy are working their asses out to make sure that things happen. So recently, in the last few days, we had this euphoria, right? The Naira getting back to 1580 and all of that. But this afternoon, it went all the way back to 1630, 1640, right? So
another
again,
source of concern.
Yeah. So you can't. These numbers, this currency has to find its true path. It's misaligned. So this is where high volatility, the Naira stable. And so what is the true value of the Naira, right? The question is, this is what if you take the price of goods in New York and price of goods in Nigeria, you find that the true value, the fair value is about 1,151 Naira. That's where it should be. But because it's a frontier currency, you have to add another 25%. So if you add another 300 Naira, so you get about 1,400. That would be where it should be trading at today. But because of all sorts of things, the currency is undervalued by 26%. So today, parallel market is at 1640. NAFEM rate, which is the official rate, is 1567. And fair value is 1151. There's a lot of work to be done. The central bank has to announce its policy and a program for selling the currency so that it doesn't run away. We think, we think that the currency will come to about 1550 by February, not before February.
February 2025.
2025. And then begins to be stable. Now, what these reforms mean, the government got 16 trillion Naira last year because you're paying more for petrol and subsidies have been reduced. This year, we've got 23 trillion Naira. You can see 43% increase. But the fiscal deficit could have been as high as 8 or 9% minus, but now it's minus 5, 6. So it's negative, but marginal. Total debt was 46 trillion Naira in 2023. It's now 134 trillion Naira, negative 190%. And external reserves have gone up, gross external reserves, mind you, not net, gone from 32 to 40 billion. So basically, you've increased your debt and increased your gross reserves. Now, how are the corporates feeling it? Because the government is making more money, right? Corporate Nigeria, top 10 forex losses by quoted firms, 1.7 trillion. Banks made some forex gains of 1.4 trillion. So net, we are having minus 300 billion Naira. And that means that corporate income tax will be down. And this is 2023 numbers. When you now look at 2024 numbers, they are much worse than this. And that's why you are having some divestments at this time. Next slide, please. Now, so what does this mean? This is the basket. This is the official basket that says inflation is at 32.7. The unofficial synthetic basket says inflation is at 52.3. Transport fares are up, but slowly, because, Dangote has brought down the price of petrol, not reflected in the petrol stations yet. House rents are up, and minimum wage is up to 70,000 Naira per man, right? So what does this mean?
What does this mean?
It means that inflation...
Even now as the Yuletide approaches.
Our projections are that inflation is going to go up to about 34.65. And it will be announced on Sunday next week, right? And so Dangote refinery is the game changer, really. We have two refineries, one in Port Harcourt that claims to be producing, right? And there's one that is producing right here. So until you see, policy change without institutional reform is the problem. So if you say the Port Harcourt refinery is producing, then you still have to reform the NNPC to make sure that people can feel the tangible results. But right now, what we are seeing here is the quality of Dangote petrol is there, kerosene, and also diesel The prices have not actually reflected the reduction which was announced, but at least the quality is there, the quantity is there, and supply is, consistent. So what does it do? It reduces production costs, and it creates jobs and drives economic stability. For now.
For now.
But in the end, we're going to come back to what does it mean. Recent developments, Dangote refinery and Port Harcourt refinery, we don't know, neither here nor there.
Even though the government says it's working at some level of capacity.
Again, announcements are one thing, but reality is that people are still buying petrol at 10.80, and we don't know what. Orthodox monetary policy is working, interest rates are high, and the naira has stopped depreciating, but there's still a lot of work to be done there. Tax reform, good economics, but bad politics, right? So we've got to manage. The economics of tax reform is that taxes have 4 canons. One, it must generate revenue. The tax reform is going to increase revenue. That it must be fair and equitable. That is, the rich must pay more than the poor. It tries to do that, right? It's easy to administer. Yes, the process is making it possible, but you need to consult people. People have to believe in you. People have to believe what you say, because they hear you, but they don't believe you. That means you're getting the wrong result. So
we talk about foreign investment as well.
Foreign investment is a major issue. We're having some divestments, right? And until people begin to see the effect, right, that they hear you, they don't believe you, but what you do is more important than what you say. And that is why foreign investors are tentative. But we are beginning to see some, people are coming back, right? A few people are coming back, but we've seen some divestment. We've seen what has happened to Lafarge. We've seen what has happened to Diageo. But the good news is that international investors are taking over from international investors, which means net, it's about the same thing. But we've also seen some divestments of E&P companies, that is the exploration and production companies upstream. We've seen that happen for Shell, we've seen that happen for Chevron, for Mobil, and there are going to be more. But basically, they are selling the land and swamp assets and going into the deep offshore. But in due course, we begin to see an improvement, because the PIA has been passed, and some of these things take time before you start seeing the results. So, to be honest with you, 2025 is going to be better than 2024. But 2024 was the bottom of it. But I don't think people should be carried away by, there's a difference between happy statistics and unhappy people, right? So what you want to do is to have happy statistics, happy people, and people who believe that the future will be much better than the past. That's where we are. So Nigeria will maintain economic growth momentum. 2025 is breaking away from a decade of tepid growth. And quite frankly, what we say, like I said, February will be much better than January. But don't be excited, because this Christmas, the bag of rice.
Which I was always going to, will Nigerians be able to afford some of the basic?
The bag of rice actually went as high as 140, but it's now at about 110. We've seen chickens, right? Live chickens are 45,000 naira now. And that last year, this was about 25. Last year, the bag of rice was about 55,000 naira. What are we seeing? Eggs are now going for 7,800. Never heard of in the history of this country, right? So eggs, expensive, right? Rice, 110, right? And then we see beans is also down at about 140. But what is interesting is that the prices are not galloping away as they used to, but they are still beyond the reach of the average Nigerian. So hardship is here.
Have to leave it at
but
that.
let's say that this is the Christmas that, unlike last year where there was plenty, by this time last year I've received maybe 4 or 5 hampers, or even 10 hampers. But this year I've had maybe 1. And I'm one of the lucky few that I've got 1.
You're one of the lucky few. We'll definitely
thank you very much.
At that. Mr. Bismarck Rwani, CEO of Financial Derivatives Company, we thank you for your thoughts on the News at 10.
Thank you for having me.